Just wanted to make this video to show you how I trade. I trade something called SPY, S-P-Y. And the reason why I trade that is because it's an index that's an average of 500 large cap U.S. stocks. I feel that when you trade individual stocks, you're kind of at their mercy. Like, you could be trading a stock and it could go out of business. You could be trading a stock and they could be keeping two sets of books and been doing something illegal. You could be trading a stock and all of a sudden they have a horrible earnings report and there's something suddenly wrong with their core business and the stock plunges 60% and it stays down there. However, when you trade an ETF or an average, you're trading an average of 500 large cap U.S. stocks. So if one of them does something wonky, they could just kick them off the average and get another good stock on there. It's like trading the ocean. It's safer. Basically, that's why I do it. It's closely tied to the market as a whole, the NASDAQ. NASDAQ goes up, so does SPY. NASDAQ goes down, so does SPY. So that's why I trade that. Now, when I trade the SPY, I trade in 3 different time frames. 3 minutes, 15 minutes, and I also trade 45 minutes. Now, why do I trade in 3 different time frames? Because different things happen in the different time frames. For example, in the 3-minute time frame, I only trade between the hours of 9:40 a.m. and 11:20 a.m. and this is Central Time. So if you're in a different time zone, just adjust that for your time in the country or wherever you are in the world. But in Central Time Zone, which is my Chicago time, I only trade between 9:40 and 11:20 because a certain thing that I trade only happens within that time. If anything happens outside those time frames, I don't touch it when I'm dealing with a 3-minute SPY. But before we get into that, I want to show you the indicators I'm using. Let's go over here. Now, you might want to just freeze frame this video and just write down these indicators so you could use them for yourself in TradingView. You have the VWAP, CM Ultimate, MA, MTF, Super Trend 1.0, buy or sell signal, CM Laguerre, PPO, percent rank, tops, bottoms, CM Williams, ADX, very important, and there's a couple of ADXs, so it has to look like this. DMI, and this is another important one, stock RSI. So basically, this is your signal getting in, and this is kind of your signal getting out down here. So that's how I have my tray set up, and you might want to do that. Yeah, I got to pay, what, 20-something bucks a month, but it's worth it. Okay, so now I'm going to switch this over to dark because I feel that I can see the screen better that way. So, alright, so let's set this over to the dark color theme. Okay. Come on. While I'm recording, this is somehow taking a lot of juice out of my system, so whatever. We'll just get that for now. Wait. And you get this out of... Alright, there we go. Alright, so that's our that's the 3 minutes. Now you can see when you set it to dark theme, things get a lot more crisp and stand out from the page, which I like when I'm trying to trade. So let's talk 3 minutes. Alright, let's go. There we go. So 3 minutes. I told you between 9:40 and 11:20. So what we do is we look for new events like these spikes. Okay, these spikes say reversal. So whenever we see a new reversal spike between that 9:40 and 11:20, you can see this happens at 10:30. Okay, we want to look if that line for well, yeah, it's the DMI line. That's the main one I was talking about, because basically it's like an ADX line. But we look at the DMI line. If that line is below, see down here, below 20, then that means it's an in. So if you get a spike, it's below 20, that's an in. So what we do is we're using options, and we use the ones that expire, not the current day. SPY has options that expire every 2 days, Mondays, Wednesdays, and Fridays. We don't use the current day. We go to the next one out, which would be Friday. Okay, and we look for about 30-35 cents, and we get in with that. And then you preset it to automatically sell when you make a 25% profit. So if you buy 30 cents, 25% profit would be 7.5 cents. So you just set it at 37 to get out, so you don't have to stare at it. And usually I find that if you just do that, you could go do other stuff and automatically, when there's a dip or something, it'll automatically sell at about 25% profit. And again, that might not be much, but if you start compounding it within a couple months, you're playing around with $100,000. Okay, within 3-4 months, doing it like this. So when I say 30 cents, that means $30 to buy that option. So that's what I do with the 3 minutes. That I only do that when I get a spike, either red or green, inside that window of 9:40 to 11:20. Now, if this showed up green, that would mean buy a call. Okay, that means it's going to go up like this. If it were that over here, that's buy call. This means buy a put. Okay, and if you're unfamiliar with options, I suggest you study that first. Find out what options are. Go online, how to trade options, how to trade Robinhood options, because I use Robinhood at this point. Eventually, I'll be moving to another platform, but for now, I'm using Robinhood. Okay, so again, never the same day expiration date, always the next expiration date out. Preset it for 25 cents. So that's what I do for the 3-minute chart, okay? And every day I check between if it's not between 9:40 and 11:20, you don't get in, okay? When there's a new spike, that's when you get in, and if that new spike is under 20, that means it's an in. If it's not under 20, you ignore it that day. That means you don't get in. So basically, if it's above 20, it's not going to be that much of a move, okay? It might go sideways or whatnot. But the lower it is below 20, the more movement it's going to have in your favor. Alrighty, so that's what I do for the 3-minute. Now for the 15 minutes, a little different. The only time, when there's a spike, it doesn't matter what time of the day it is, I'll get in if, alright, you see this ribbon? If this spike happens or corresponds, like right here, if it's in the gray, you don't get in, alright? And another thing that happens, if there's a spike, and up here on this ADX, it's in the blank, like yellow zone, alright? Now you can see movement only really happens when the ADX becomes colored, like red or green, alright? When it's like this weird yellow color, things tend not to happen too much. You know what I mean? Things tend to flatten out. It's not as volatile, which means we don't make money. So if you get a spike, any spike, I want to see that it's in a color zone, like this one is, and down here it's in a color zone. Alright, so I would use that. So I would jump in on that. Okay, so let's see. The next one, is this spike in both color zones? Let's see. Yes, just barely. So I would get in and use that. And for these, I would set your instant out at 25%. And let me check the chart here. What expiration am I using here? 15 minutes by 50%. You can compound it. ADX doesn't matter in here, but the ribbon, as I said, and the color bar has to have color. So you set it for, I'd say, one expiration out. So you have the current date and one expiration out, sort of like what I showed you before. So if today's Wednesday, you're doing this on the 27th. Okay, never the same day. That's pretty dangerous. You do it one expiration date out, and you set it for 50%. You do it like that. Let's see. Would you get in here? Yes. Would you get in here? No, because here's a gray zone. There's no color. And, you might have some color here, but they both have to be colored. This ribbon has to be a colored part of the ribbon, like here, 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 or here, to get in. No gray. And also, this has to be colored here, 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 here. You wouldn't get in here. If you hit this, you wouldn't get in. You wouldn't get in. Now, once again, they both have to be colored. The ribbon and this. If one's colored, like right here, okay, but then you look down and it's not colored here, you don't get in. Same thing in the reverse. If you look down and it's colored down here, but it's a gray ribbon up here, you don't get in. They both have to have color in order to get in. All right, so that is for the 15-minute. Now let's see what we do for the 45-minute one. Let's go on down a little bit. 45 minutes spike. 45 minutes SPY. All right, so here's a little bit different for 45-minute. Let's go over here. Let's break this off. For the 45-minute, when you see a spike, okay, you have to be under the 20. All right. Now, do you see this down here? Do you see this yellow line? That usually means it's going to go up, it's going to go down. and you'll see the corresponding up here. So at the peak, it's up here, tends to go down, and it goes down, and it's on the ground for a while, and around here you see it's at the bottom, looks like it's going up, and it corresponds up here. So up here usually means short or put. Down here means call or buy. Okay. Now, in the 45-minute, when you see a spike, all right, the DMX has to be below 20 for you to get in, because if it's above, it won't really move. It has to be below 20, just come straight down, it has to be below 20. And this has to be in a position where it looks like it's going to go the way you want it to. So since it's red, that means put, but your hope, what put means you hope it goes down. So since this thing's at the top, this RSI Stochastic indicator, that's good. All right. So it's this, once again, this is below 20 here. This DMA indicator, see this 20 marker, and you follow this line all the way out. And yep, right where this is, it's below 20, good. And this is in the proper position at the top, about to go down. So that's a get in, okay? Now right here, would you get in here? All right, this spike, let's see. Nope, the DMI is way above 20. Even though this is in the proper position, like looks like it's going to go up, the DMI says no. Right here, would you get in? Nope, it's above the 20. Also, I don't like getting in it on flatliners like this. So I'm looking at this, it's flatline. That usually means something's going to happen. Would I get in here? Oh yeah, I'd get in there, because you look, this is in the proper position, and the DMI is below 20. So when do you get out? All right, let's take a look at this. Here you can do 2 expiration dates out. Okay, so here, instead of Friday, you could pick the following Monday. You could pick, like you could go, so today 1, 2. So you could use 30, and you could preset it for 80%. Okay, you can set this for 80% get out, and just, you don't have to look at it again. Set it for 80%. So whatever you got in, multiply it by 0.80, and then add that to the price you got in. And you can watch it and monitor it, but generally I like to set it at 80%. This happens about 2 to 3 times a month on the 45. Okay, if you scroll this, you'll see this happens about 2 to 3 times a month. So basically, that's how I trade. If there's any questions, just let me know in the comments. Thanks.